in conjunction with NZHIT and Deloitte. So thank you very much to our Deloitte experts for joining us today. And I'll just quickly give you a brief overview of who is here today. So we've got our beautiful chair of NZHIT, Kate Reid, who is also partner of digital health at Deloitte. And we've got Aaron Thorne, who is a tax partner at Deloitte, and he's currently in Christchurch. So he's luckily same as me in level 2, and also the national lead for R&D at Deloitte. Simon Taylor, who's a director in the R&D tax team, and Calvin Lee, who's a consultant. He is in Auckland as well, and Brendan Ning, who's in Wellington with me, and he is also a consultant. So thank you, team, so much for being here today and for presenting everything on these R&D tax incentive schemes and how we can make the most of them. I'll hand you over to you, Kate.
Thank you, Ril, and thanks everyone for joining. Hopefully you've got some lunch in front of you. So you might be aware, as part of NZHIT, our NZHIT board and our management team, Ril and Liam, have been talking about how we can bring more of these webinars that I guess are helpful for our members on different topics. And we've run a series of webinars with Simon Martin, who is actually seconded onto our board and has been part of our NZHIT family for some years. So he's from HGM Legal, and he ran 3 fantastic sessions on understanding legalese. So legalese for dummies. I found them really informative, and we had some fantastic attendance at those sessions. Yesterday, Ril was down in Wellington hosting a hybrid webinar with the Privacy Commissioner, John Edwards. So after 3 failed attempts of trying to get us all in one room, we ended up with a hybrid event, which I think actually worked really well. So we had a really great turnout to that, and this is the 5th in the series of bringing you informative webinars on a whole host of different topics. So today, R&D tax credits. I've got a team of pretty impressive tax experts at Deloitte, so I asked them and they kindly accepted to run this session for you. So I certainly don't claim to be an expert in this space, and we'll hand over to them. Just to note also, the Ril and Liam are also setting up a global innovators group. So we plan to have a special interest group like we've got running for virtual health and some of the other groups that we've got going, e-mental health, and then the digital enablers group. We're planning to run one on global innovators. So watch this space. I think Ril's been reaching out to many of our members to see whether people would like to participate in that. And so really looking forward to this session. I'm going to hand over to my colleagues. I think, Aaron, you're going to kick us off. So welcome, everyone. If you do have questions for the team, don't hesitate to post them in the chat, and we'll try and pick those up and address them as we go through the session or at the end. Great, thanks.
Thanks for that. Yes, and I was just going to echo the same thing, that we really appreciate questions as we go through. So if you have a point, please either feel free to either chip in and ask the question verbally, or you can put it through the chat and we'll do our best to do it, but we will also take questions at the end. So welcome today. Really pleased we could come and have a chat. As I said, my name's Aaron Thorne. I'm the leader of our R&D Government Incentives Group. Yeah, I've got a long background in helping businesses get to assist in getting access to government grants and tax credits. And we're here today to talk about the tax credit regime. I'm not sure if those who joined heard Ril and I just discussing that this is this regime, which was introduced by the Labour-led coalition government as part of their first term, was is actually a return from what they'd previously done prior to the national-led government before them. So it's actually a returning of a regime that was in about 10 to 13 years ago. And look, in all honesty, there's been some headwinds and road bumps along the way. And so Ril was just mentioning that one of the experiences of one of the members have been quite tough in trying to get through this. And so my first slide was actually to try and give a little bit of a roadmap of how this regime's come into play. and how it's progressed from something which was quite prickly and difficult to now where we're sitting at the moment, where I'm very pleased to say that actually the road has got a lot smoother, a lot straighter, and we're finding that 2/3 of technical of claims that are going through are actually going through almost without question. In fact, without question, if they've been properly prepared. And so it all comes down to putting the right things in front of the government, and particularly Inland Revenue and Callaghan, so that they can tick their boxes and get the process through. So I'll cover off just generally on a bit of that, and then I'll hand over to the team as they then start to go through some of the technical elements of the presentation, just around what actually needs to be done. So I imagine that most people have had some exposure to this, and so I sort of wanted to race through this reasonably quickly. There's been the regime's actually been in place now for 2 years, so I imagine most people have gone to a presentation or heard something, but just in case there is someone who's coming at this fresh, I'll cover up on the very basics, which is that it is a 15% tax credit on the amounts of R&D that is spent in any particular year that's eligible. It replaced what was previously the Callaghan Growth Grant, and the Growth Grant at 20% was taxed down to an effective 14.4 once you took away the deductions that were coming on the spend. And so 14.4 versus 15, the idea being that it was basic parity with a slight chip up, I think was the idea of the government at the time. It's probably a good point at this point just to say that the regime goes through a focus on where the Callaghan Growth Grant was really around approving a book of work and projects. This one requires, on a project by project basis, a real focus on showing why there is a technical challenge that's involved. And that was initially quite applied by Callaghan, who are asked to adjudicate and adjudicate whether things are R&D. That was applied at quite a high threshold. So the initial experience of people going through this process was that it was extremely hard to go through and get your projects approved, given that Callaghan was almost acting as gatekeepers on that, given that they'd set the threshold for those tests extremely high. And so there were some quite negative experiences that was initially faced. And so your comment, Rule, before around a member having found that process really difficult and discouraging is something that we've actually ran into quite a lot. I'm pleased to say that feedback came back, got all the way through to the Minister. The Minister then realigned the team to go, let's remember what this is about. This is about government support for business R&D. It needs to be actually handing out money. It needs to actually be approving projects, and it specifically is intended to include and apply to the software development activities. And so the Revenue and Callaghan have just been going through a process over the last year where they've been resetting all of their thresholds and tests in consultation with ourselves and the rest of the advisor groups. And I'm really pleased to be able to say that we're now in a situation where before I would have had to concede, yes, this is a really tough regime. Now I'm saying that from what we're seeing off the back of those changes, we actually have a regime that works, and it works for the software sector, which is fantastic. Simon's actually, as I said, dropped me a couple of little messages as I've been talking to say, make sure I mention that where we've been involved in helping get the claim preparation in the right wording, we're getting the vast majority of those coming through without challenge from the revenue. So we are now on this, where previously it was one where it was a grind to try and show people what you were doing actually met the thresholds. We're actually getting it through without even being challenged if you are putting the right things into the original application. And that's really the key thing. So the team's about to go through some of the technical aspects that are there, and it is super important. Where people have got wrong in the past is that I've tried to say this is what our business goal is, and this is where we are. This is what wonderful new business initiative we're going. That's not the focus of this regime. Instead, you really have to focus on talking to the specific eligibility requirements. Much like anything you do with government grants, they have a threshold and they've got boxes they need to tick. So we'll cover off on that in the rest of the regime. So my first point that I wanted to cover off on was that we're in a substantially better framework in terms of getting this through the government and getting money out. And we are seeing that money come out through a relatively easy process now. Second point was that the minister also noticed that a lot of the people who'd received Callaghan growth grants in the past were reluctant to engage and were comparing the regimes unfavourably. So she implemented a transition support payment, which is to say that if you've previously been a growth grant recipient, provided you put in an R&D tax credit claim, then they will then, whatever the result of that is, they will then match that up to that number based on being the average of the last 3 years, or the amount that you've been entitled based on your current year spend. So I think that is also a really good thing to know, that if you have previously been a growth grant recipient, that you have that safety net of knowing that you'll at least get the number that you would have got under the growth grant in this year, provided you go through the process. The last thing I was going to cover off on was just focusing on that the credit actually comes out in either a reduction in tax payable, so you get a cash benefit in terms of not having to pay as much tax, or alternatively, if you're in losses, then they're actually looking to pay that out in a cash refund. So that's happening, and we're in discussions with them at the moment around how that could then become an in-year payment, so that it comes out, potentially quarterly or something like that. But that is a process that will require some legislative change, so we're not expecting that to happen at the moment for another couple of years. So at the moment, it is something where if you're in losses, you look to get that benefit once you've lodged your tax return. I don't know if I can pull up the comments as they come through.
Just a question there. Is it a costly process to get the application together? And does the tax incentive ultimately outweigh the cost, so it is worth it?
It's a really good question. And I think the point that I always make is that the only reason you'd go through the R&D tax credit was because on a cost benefit basis, it made sense. So I think that the first thing to do is to approach it on the basis that similar to the 80. So the short answer is yes. It is the cost benefit analysis does work, and you need to make sure that on the basis of the size of your claim that you're making an appropriate, that you don't overspend, and that you also don't underspend in order to make sure it does get through. Because the way that you do load up the costs is if you lodge something that doesn't meet the requirements, and then you end up having to engage with the revenue in Callaghan in a lengthy process. So really good question. But as I said, sometimes the 80-20 rule really applies, where you sort of go, I can get 80% of this through really easy, and then there'll be 20% where there's a lot of difficulty, and maybe that's best to leave that on the table. So having some judgment around that. There is definitely some hoops to jump through, and I think it's important to acknowledge that, and that's what we're going to cover off on the rest of the presentation. But certainly one of the factors that we're looking at is that the vast majority of the benefit should, in terms of what the total credit that's available, the vast majority should be getting back into the balance, the bank balance of the claimant company, and not being absorbed up in costs and things like that. So, I think company to company, based on, it's hard to talk in generic terms, but you'd expect 75, 80, not up to 90 to 95% of the credit should be able to land in the thing. But on average, I'd sort of see that the cost of preparation, when you include internal and external help, you're probably potentially looking at somewhere between 15 to 25% loading, which means 75 to 85% is actually there. So when I look at that, I go, well, look, the cost benefit analysis really works. I'm happy to take questions, and particularly once we've probably gone through the process of what's actually involved in the claim, we can have a bit more around the commercials of it, because I think that's a really good point. But as I said, I do come back to, you only do this for the money, and so it's about making sure that when you look at what you need to document and how you approach that, everything should be guided by making sure that that's a win-win. Right, I'll hand over to the team, and as I said, we'll come back at the end to field sort of questions.
Right, thank you, Aaron. So, and I'm just continuing on from Aaron's point, the way to actually get that cost-effective claim and benefit for the business, for the claimant, is a really good understanding of what these rules are to determine eligibility, how they apply to your business, and really just spelling out first time in your claim form why you meet these eligibility criteria, and you get that right up front. That just makes life so much easier, rather than not putting in what the assessors want when it comes through. And that, and having to some extent the right kind of systems throughout the year, which Brendan's going to talk about a bit later. But even then, it's not, you don't have to develop something new. It's just being mindful about it as you go along, and keeping it simple. So the crux of what you can actually claim falls on a definition of what's called a core R&D activity. That's at the kind of heart of the claim process. You have to have a core R&D activity to be able to make a claim, and it's those activities that go through as part of the tax incentive application process. And it's a three-pronged test for what's a core activity. There needs to be an element of new knowledge. So there's a material purpose to create new knowledge or new or improved processes, services, or goods. So this is probably more in the realm of where people might expect the regime to be sitting. It's something new. However, we have got clarified that this broader eligibility definitions that Aaron referred to earlier, that this does not need to be cutting edge, brand new product that has never been seen anything similar in the world before. It can be new or improved for that actual business that's claiming. It's something you've got that works, and you're actually improving it and making it work better than it used to. So the bar on that first step isn't a revolutionary, groundbreaking, totally different thing. And these comments are based on the guidance and discussions we've had with the officials, and also what we've actually seen accepted as well on the back of that. So very much want to clarify that first hurdle. The second step is it needs to be carried out with a systematic approach. So what they're looking for there is that they actually followed a plan. There was a logical investigation to try and solve a problem. There was testing, there was some kind of experimentation. And this is really geared around saying we aren't going to reward something where it's just done haphazardly. There's no kind of set of objectives we're trying to achieve that have been defined, and then we've got a plan to try and measure ourselves whether we've achieved that or not. That's what is the requirement, and they just don't want people haphazardly saying, "Oh, I found something." Quite relevant, say in a manufacturing context, where they've found something that goes faster, for example, or a bit more efficient, and say, "Oh, let's try and whack in a R&D claim after the event to try and get that, because this is kind of really good and was just discovered." So that plan side, again, within the software sector, does fit largely with what existing practices are, where you know what the product is actually, or you set out what the product is trying to achieve, you set out what the product objectives are, and then you've got a system, whether it's in Jira or however else, where you record what you're doing, and there is a record of what you're actually trying to test and achieve. So again, we're finding the systematic approach hurdle is usually quite readily met in this sector. The third and most important factor to go through is whether the activities are seeking to resolve scientific or technological uncertainty. So this regime isn't new, and you may well have heard this, but this is the number one thing that determines whether it's core activity more than anything else. So then an application is not interested, an assessor is not interested in hearing what new features it does, what the objectives are, and not even necessarily why it might be different to what's out there in the market, although that does have some relevance from a technological perspective. It's not telling them what it does. It's about setting out what you're trying to achieve, and then explaining why there is no known solution to what you're trying to achieve, and whether that's trying to make something go faster, whether it's trying to make it handle a greater data capacity, whether it's trying to achieve security, or whether it's trying to make something more compatible. You've got a specific health tech solution, and obviously there's existing platforms out there in the world of health technology, and you're trying to make things work effectively across platforms. So it's about explaining why there isn't a known solution to what you're trying to do. So the knowledge to resolve that uncertainty is not publicly available. And then that's measured on a test of what's readily accessible. So it's not a test that somebody somewhere might know it and it's a secret. It's what information can you readily access, and being able to prove that that readily accessible information doesn't give you an answer to what you want to do. And then the other element of that, it can't be deduced by a competent professional. So you've got a problem, it might be new in terms of the outcome, but the way to actually achieve it would be quite straightforward. It's just nobody's thought about it before. So it's not that. It's about explaining, well, you might have an idea how to do it, but you actually don't know if it will be successful, and that can include the specific environment or architecture of what you're working in. It is a very tailored test, and most of what we are claiming is explaining those specific constraints that apply to the claimant's architecture, that then get it through and therefore differentiate and explain why it's hard. So yeah, that's the key message to get through. And people that are having a hard time through getting things through, it's by not articulating that sufficiently. And it doesn't need to be lengthy. It's very much being mindful of honing in on what these differentiators are, and explaining why they are different, and that can include metrics as well, for example. So you've got a particular target. If you could just flip back 1 second, Calvin, before I go on.
Simon, I was just going to also just say that it's really important that we allude to or talk to what the specific technical requirements are, the eligibility requirements. But if I went to a rule of thumb of how you could approach what does this mean then practically, what we're really trying to distinguish between is the routine software development and where there's a need for some investigation or some trialing. And so if you're saying there's a technical challenge in what I'm trying to do, there's something where it's a little bit difficult or it's not immediately obvious what the answer is, and I need to investigate what the potential answer could be. And so the answer is not immediately obvious, and I'll need to do some testing and trialing as I proceed with trying to come up with an answer or a solution for that. Then you're 90% of the way there of getting it. And then we just really need to articulate that sort of concept into these specific terms that Simon's been talking about. And we'll get onto in a moment into some of the practical examples of how that would be. And you will see that the bar is actually reasonably low. So the challenge with this is that the language of the law is actually in some ways a little bit inaccessible because it's been written from a legal viewpoint, of course. But that concept of, I think that concept of if you talk anything where you're saying, hey, there's some experimentation I'm going to need to do, but even getting back to that concept, I'm going to need to do some investigation to see how to do that. Highly likely you're over the threshold on this, and it's just going through these steps that Simon's just talked to.
And that you bring in the constraints that you face as well. So think about, yes, on an absolute basis, this might work, but I have to make it work with a certain response time or something like that. So it's about identifying and bringing those out as well. The final point on this slide is what I've just explained is core. There's also a supporting activity. If you have a core, you can then look at supporting activities that don't in their own right meet the core definition, but can be brought in. So this is something we're in dialogue with about how this test is applied, but at the moment the assessors apply it on the basis that, you know, if you're doing literature searches, that isn't in its own right resolving the uncertainty. That's giving you the background to then experiment, but you can still claim it. You just have to explain it's a supporting activity or a kind of generic data model that you set up to record the results of your activities, isn't of its own right resolving uncertainty, but it's essential to help you resolve it. So there is this core, and then there's the supporting that is fully allowed and fully within the claim. You just at the moment need to be quite careful on identifying those and disclosing them. Okay, Calvin. So the next slide, I'm just going to go on to when Aaron at the start said, referred to how the regime has progressed from a narrow interpretation to broader. So these comments here on Deloitte's view of the world, this is what's in some updated guidance that was released in March this year following all the complaints from claimants that things were being applied too tightly and the bar was set too high. So just to kind of prove this point that it doesn't have to be a absolute brand new thing that's never anything been done like it before. It can be adapting knowledge from the same or another field of science or technology. So something that's been used in one context or one platform, you don't know if it will work in a different scenario. Second point, I referred to constraints in my previous slide. So this is really just the Callaghan and Inland Revenue guidance confirming that that is an absolute test of uncertainty and can create uncertainty. So you've got specific targets that you're trying to achieve, and it's hard, and you've got to do that experimentation to actually do it. Using a known process where the result or outcome is unknown. So something's been done before, but you're trying it in a different context, and you just don't know if it's going to work until you give it a go. So again, that's just showing also the breadth of it. This other one is an important one as well, where individual components of a system and their interactions are known, but you then actually bring them together as one, and then you don't know whether they'll work or not. So again, another example of uncertainty. And then the final one is something is known to work, but you're actually trying to make it more reliable or reproducible and reducing an error rate from actually using it. So yeah, that people often come with a misconception it's got to be an absolute brand new world first idea, and I think this guidance that's actually out there and published proves that that's not the case. I'll now hand over to Calvin, who's probably might be answering some of the questions you've got as well. You know, we're talking about theory, and I've tried to give some examples. He's just going to talk through the types of areas where we've seen successful claims actually go through, things that are accepted. I would add the focus isn't necessarily on what's being done here and thinking, oh, if I'm doing filtering a database structure, then everything in that area and that third bullet down is R&D. That's not what we're saying. What we're saying is these are the types of areas where once we've looked under the hood and started to investigate how hard is it to do it, there came out some specific circumstantial factors that actually it was very hard. And once we start digging into the uncertainty, these areas we'd actually found that there's valid claims. So I'll just hand over to Calvin to talk about those.
Thanks, Simon. So we've compiled some examples of claims that we prepared for the software industry that have been approved by Callaghan. So while these examples may give an indication of the types of activities that qualify, as Simon mentioned, the key determinant is to what extent these activities have an element of technological uncertainty. So whether technological uncertainty exists in your R&D process, it's not a matter of kind of black or white. It depends heavily on the circumstances and in many cases, the constraints that apply to the problem that you're trying to solve. So I'll elaborate on some of the high-level details around these examples, but please understand that we cannot give any specific information on our clients' R&D projects as it's subject to confidentiality. So if we look at the first bullet point, algorithm design. So in this project, the claimant sought to improve the process and calculation speed of their analytics rules engine. And the key uncertainty here was whether it was possible to reduce the calculation time to under 5 minutes without compromising the stability of the engine, as well as the accuracy of the results. So this was uncertain due to the complexity of the domain, which included a wide range of different data points with potentially hundreds of billions of combinations. Likewise, existing big data warehousing solutions were not applicable due to the claimant's unique query language. And this meant that there was technological uncertainty as they had to design and test their own algorithms to reduce the calculation load and minimize redundant calculations. So on the second bullet point, synchronizing data flows, this project aimed to bridge data flows between the claimant's CRM systems and a number of third-party data management systems in order to prevent double handling of data. The key technological uncertainty here stems from performance and compatibility issues in connecting with third-party systems built on legacy or proprietary platforms. The claimant faced a number of challenges around authenticating and connecting to third-party sandbox environments due to different levels of data field granularity. And consequently, a systematic approach was necessary to discover and develop matching rules to achieve the targeted level of performance. In our view, this claim wasn't the strongest in terms of technological uncertainty, as it's quite a low bar here, but it was nonetheless approved. So we would recommend probably exercising some caution based on the facts, and certainly a close consideration of the constraints that apply is warranted. So on to the third bullet point in filtering. So this project sought to develop a sophisticated filtering solution and aggregate data for a complex data structure with multi-layered and multi-role entities. The constraints that applied here to the claimant's proprietary data structure, such as its B2B structure nature, meant that it wasn't possible to apply existing solutions because they were designed for a B2C data relationship. And then on to scaling up. So in this project, the claimant aimed to scale up the number of concurrent users on their systems from less than 10 to up to 1,000. And this meant the performance of the solution was the key constraint, as users needed to access the outputs in real time. And the number of API calls would increase exponentially with this increased number of users. So the technological uncertainty arose as a result of the unique code base and architecture, and required the claimant to carry out extensive testing and optimization to resolve. Second to last bullet point, in terms of increasing the speed and ease of deployment, the claimant's aim was to redevelop the software delivery and testing pipeline to ensure that software components in their stack were at a high standard of reliability and robustness. They were working with an aging and low quality data code base that relied on specific legacy frameworks, and the goal was to improve the speed and ease of the deployment and testing scenarios by at least 50%. The claimant was limited in the scope of their development and therefore were unable to change the code base. Furthermore, they had inherited a number of non-standard extensions for configuration management. And to further complicate the data development process, the claimant sought to create a common interface between these components, many of which were built across different languages using different frameworks. Therefore, there wasn't any publicly available information for them to use, and their competent professionals had to undertake a systematic approach in order to solve that. And finally, in terms of enhancing improvements to imaging software, so the goal of this project was to improve the diagnostic power of dynamic contrast enhancing imaging in personalized oncology. The technological uncertainty relates to the large and complex medical image datasets, which can come through in streams or have different levels of quality. So having covered some examples, I'll now discuss about some of the carve-outs to the activities that you're able to claim. So this slide lists the software-specific activities that are ineligible to be claimed, although note that certain activities are excluded as core and supporting, while others are only excluded as core, which means that you'll be able to claim it as a supporting activity. So these activities have been carved out on the basis that they either do not contain sufficient technological uncertainty or are otherwise excluded for policy reasons. If we look at kind of the first bullet point, software development undertaken for internal administration, so this relates to software development for finance, HR systems, ERP systems, and these are considered to be insufficient to warrant a government subsidy for. Likewise, Inland Revenue considers that the conversion of existing systems to or integrating existing systems with new software platforms, there aren't enough economic spillover benefits to this conversion activity to warrant supporting with the RDTI. Other activities that are excluded include routine debugging and computer maintenance. So these are obviously small-scale activities that don't resolve don't seek to resolve any kind of scientific or technological uncertainty, as well as data mapping and data migration testing activities, as these relate to the primary step of integration activities. However, it's still relatively unclear how this will interact with the new arm of eligibility in terms of system uncertainty, because there's so Inland Revenue has issued in their new updated guidance the eligibility of system uncertainty, which involves a number of integration activities. So probably watch this space in terms of how that will play out. And finally, testing security protocols or arrangements where these are ancillary to your software project itself. These will be excluded from core. So now I'll pass on to Brendan, who will discuss.
I've just got a quick question, if I may, because I think this is really interesting for many of our members, particularly that second bullet around, I guess, the interoperable landscape. You know, we've got the HERA program of work with our health reform, you know, in progress, and many of our members are already looking at integrating with each other to share data. It feels like that we almost need to challenge that assumption that that is not eligible for R&D, because, you know, I know there's many, you know, conversations going on at the moment with many of our software health IT members about, you know, these sorts of things almost feel like they need to be funded, and modernizing their own systems so that they can play in this new interoperable ecosystem. So that integration piece is a real stickler for us, I think, as a membership organization, and something that maybe we can take offline, but be interested in members on the call, whether you have any views on that or any comments.
I'll just kind of jump in and explain what we're seeing practically on that one. Yeah, when that first came out, it did raise some alarm bells about how broadly that would be applied. We know that the intent behind it was more to prevent, say, a bank spending tens of $millions kind of merging platforms, banking platforms, where they might have multiple legacy platforms. IRD had done their homework with what had happened in Australia, and there was huge claims that had gone through there, and they didn't want to support that. So that was the intent behind it. We were slightly concerned whether that intent in practice would mean that anything that has any kind of interoperability between platforms would be kicked out, and that's absolutely not what we're seeing. You know, we are, with a lot of what's gone through does rely on interoperability, and but I think, as Calvin mentioned 3 slides further up, there was reference to like system integration being something that is allowed. So I've asked the question of clarification, or how can you have that as allowed but this conversion as not? As I say, what we're seeing in practice is anything with this interoperability is going through, but we have asked for further clarification in this latest round of software guidance that's coming out, that they actually cover this point. So I wouldn't say at the moment it's a blanket kick out that anything in that area is a no. We've certainly had success in having things accepted in that area.
That's good to know. Thanks, Simon. Yeah, I think we've, and I'm not sure if Deloitte know yet, but on the 10th of December, there's the HERA webinars coming up. So actually it might be quite important for you guys to understand what that architecture is as well, because it's a big thing that's moving forward in the next sort of 2 to 5 years that will affect our members significantly.
Certainly, another thing to add, I guess, to the whole interoperability segment is in terms of emphasizing that this exclusion specifically carves out the conversion of existing systems. So when you're looking at the development of something new or a new project, then as long as it's identifiable as a separate and new development, then if you're integrating with other systems where there is the element of system uncertainty, then you'd be able to make a claim for that.
Yeah. And we've successfully done that.
I'll just pass on to Brendan now to discuss the eligibility, the expenditure eligibility.
Okay, so now we're on to sort of the fun stuff, what you can actually get out of the regime. So As mentioned before, it's a 15% tax credit. So basically, for every dollar you spend on eligible R&D activity, you're going to be getting 15 cents in the dollar back. So there's a bunch of different things that are eligible. And for most companies on this call, I imagine the main one would be labour costs. So that's a significant chunk of the claims that we're seeing. That's the biggest R&D cost for these organisations. And so that's the people that are involved in the R&D directly, but it's also the costs of other people who are sort of involved in project management or other activities, as long as just to the extent that that does relate to an R&D activity. So what we suggest in this sort of area is you cast the net quite wide in terms of all expenditure, and then you take a step back and then look and carve out anything that is ineligible. So I'll just cover some of these a bit briefly, but labour costs includes things like salaries, bonuses, it includes employee share schemes, entitlements, that sort of thing. So it's quite a broad range of things. You can also claim for contractor costs. So again, to the extent that it relates to R&D, those sorts of costs are claimable. Any materials consumed in the process of the R&D activity, those are going to be eligible. And then things like overheads. So if any of you were involved in the growth grant regime, you'll probably have your own calculations for doing this already. But that can include things like your lease expenses, electricity expenses, just general office and admin expenses. A portion of that can be allocated to your R&D activity, and you can claim those as eligible costs. R&D tax depreciation, so that's on R&D, so assets used in the R&D process. You can claim depreciation as one of those eligible costs, and then you can claim up to 10% of overseas expenditure in your claim. So up to 10% of your claim can be overseas expenditure, and part of the reason behind that is they recognise that R&D does take place overseas. Sometimes we just don't have the expertise here in New Zealand. But they also want stuff to be happening here, so there's a spillover in benefits, etc. So they do allow for some overseas expenditure to be claimed. One question we get asked a lot is about capitalisation of expenditure. And so if you're capitalising to an intangible asset, that's going to be okay. Those costs will be eligible. But then if you're capitalising to a fixed asset, a tangible one, then we're only going to be looking at like the labour costs and contractor costs. Those will be eligible. There's a few other little caveats sort of just to keep in mind. So it's things like the commercial production rule. So when things are in the course of commercial production, you only can claim the little sort of bit over and above. So the extra effort in relation to the R&D. And then there's also a feedstock rule for sort of things that are consumed in the R&D process, where you're then selling something at the other end. But basically, yeah, so 15% tax credit, that is refundable if you're in a tax loss position, so you can get that money back, or it just reduces your tax liability. And as Aaron mentioned earlier, I think they're looking at in-year refundability or in-year payments, sort of to ease to help with that cash flow, because at the moment you have to wait until the end to get the money out. So hopefully they do something in relation to that. I'll move on to the next slide. So this is on eligible entities. So this is basically who can claim the R&D tax incentive in a contract or group situation. So in a contract situation, I think if you step back and think about whether you are being contracted to undertake a specific R&D task, in that situation, you would be a contractor. But if you are overall being contracted to provide a solution or to provide a product or something, but you have the choices in how to get there and what R&D you're going to undertake in the process, then you are able to claim in that situation. So there's just a few tests that need to be worked through in considering whether you're eligible to claim. And so the first one is the ownership test. And that basically means that you have the right to use the results of the R&D, or you own the IP. So where you can use the results of the R&D for no additional cost, or where you do own the IP, then you should be the one eligible to claim. And the whole point about this is they only want one person to be claiming for an R&D activity or for the expenditure. They don't want double dipping to go on. They don't want two separate entities to be claiming, which is fair enough. And the ownership requirement is also satisfied in group scenarios where someone in your group owns the results. You might not own them yourself, but someone else there does. And then if they are resident in a country with which New Zealand has a DTA, a double taxation agreement. One of the other factors to consider in terms of whether you would be a contractor or whether you're undertaking the R&D in your own right is whether you have control. So you need to be able to control the start and stop of R&D activity, and you need to be able to change the direction of the R&D activity if you wish to do so. If you don't necessarily have that power, then you're more likely to be a contractor. And I guess part of this is sort of whether it's not about day-to-day management. So day-to-day management is fine, but sort of at a higher level, whether you are controlling the direction of what is going on. And then so the last factor to consider is just financial risk. So is the fee for the R&D going to be dependent on the outcome being successful or acceptable by the principal or not? So it's kind of looking at whether you're contracted to deliver an outcome or whether you're contracted to perform services. So if you're contracted to perform a specific service, so the example here is if you're contracted to run a few tests as part of like a wider R&D project. In that situation, you'd probably be a contractor. But if you're contracted, but you're still doing the wider thing, and you can choose how to get to an end result, and you can choose direction of that, and you can choose how you undertake R&D, then in that case, you'll be able to claim. We've spent quite a few hours looking through contracts for clients and just working through sort of these IP and ownership issues. So if you do have any questions, feel free to reach out.
If I could just jump in a second as well, what that does mean in most cases of the common scenario is you're trying to develop an IT solution that you then use as software as a service, and it's all dependent on it, be it you invest, and if it's successful and works, you take that product to market, then you're very likely to meet all of these tests in that case, if it's your product that you then ultimately license out.
Yeah, cool. Thanks, Simon. I'll move on to record keeping now. So this is sort of one of the hurdles that a lot of people are thinking about when it comes to the regime, because the requirements talk about having documentation and being able to support your claim. But our messaging, I think, here is that what you are doing already should largely be okay. Most businesses seem to be meeting at least some sort of minimum like documentation requirement, some sort of record keeping requirement. The only thing that might be required is some tweaks here and there to ensure that you are capturing all the things that you need to capture. And you don't need to change your entire system of your entire way of working. Everything that you're doing already should be fine. So there's sort of two focus areas on the documentation. One is sort of the activity eligibility, and then the other one is the expenditure eligibility. So in terms of the activity eligibility, the kind of documentation IRD is expecting you to be keeping and might ask for things like test results, business cases, final reports, those sorts of things, just as a record of what you've been doing and how you meet the key criteria. What I will say in this area is we don't actually see IRD asking for this information that much. What they are more keen to do, and sorry, when I say IRD, it's actually Callaghan that's reviewing the activity side. And so what we've seen is Callaghan is more keen to actually talk to you in person or have a call and talk through how your project eligibility and then go back and forth with you on any questions that might have to clarify the eligibility of your activities. They're not too concerned with looking at sort of all the literature searches you've done to prove that no one else has done this before, for instance. They seem to be okay with just a chat. I think part of it is Callaghan just wants to get in front of you and they just want to talk to the businesses, sort of just to like say, hi, here we are, we can help. And they want to help you because what we've found is that they are very willing to help you to get to where you need to be able to make a claim. The other side of the record keeping is the financial side. So it's in terms of the expenditure. And this is where we've seen IRD ask for a little bit of information, but all this information is stuff that you would have captured already in preparation of the claim. The number one question we get asked about this is whether you need to keep timesheets, because I know a lot of organisations don't keep timesheets. Here at Deloitte we do, and they are the bane of my life. But the key message is no, you don't need to keep timesheets. That's obviously like the gold standard, but you just need to be able to substantiate in some way sort of the time that's been spent on R&D activities, because that's what we're using to apportion labour costs to R&D versus non-R&D. And so a lot of organisations sort of backfill this. They look back over a certain period and they say, okay, these are the employees we've had. This is roughly how much time they spent on R&D, and this is how much was spent on just other activities. And then they apply that to the salary to get your eligible expenditure. We also find examples of sort of records that people keep things like Jira tickets. People use Confluence or DevOps. A lot of the things in there are time stamped as well, which can help, but usually the descriptions and things that are put in there sort of point to both the activity and the amount of time that was spent on activities. So that can be really useful for getting the detail required. Did you have something to add, Aaron?
Yeah. I was just going to make the point that, because it comes back to that question I got right back at the start around the cost effectiveness of putting together a claim, is that my key message with this is that generally the documentation that you already have that helps deliver your R&D, which is already driven by what's needed for the business, will cover everything that we're looking for, with us then needing to supplement that with a little bit of questionnaires and things like that. So what we're definitely not talking about is the implementation of a large new R&D documentation system in every business in order to be able to claim this. We'd instead be leveraging the existing documentation. And sometimes that's often we come out of that process and say, look, we recommend you add an extra field into this document or ticket, or at which point we're going, look, we think that if you added this, it would add to it. But generally, we're able to almost without exception leverage off what you've already got. And I think that's a key thing when we start to look at what's the cost of proceeding with this, is that it's not something where you're going to add a whole lot of admin and barriers to progressing your R&D.
Thanks, Aaron. I'll just quickly move through the next two slides and then leave some time for questions at the end. So this is about logistics. So the claim approval process. So the first step is you need to seek general approval, so pre-approval of your activities. And so that can be done anytime during the year or up to basically a month after. And that's basically on a project by project basis. You do a write-up of what your R&D activity was, to answer the key questions about like the scientific technological uncertainty, what the purpose was, what new knowledge you were trying to achieve. You write that up and you submit that. It's all done online through MyIR. Callaghan will review that. They'll come back and they will either say, yep, that's fine, or they'll have a couple of questions just to query some things. And then that will get approved. And then once that's been approved in MyIR, at the end of the income year, and up until basically a little bit after your tax return is due, you can then collate the financial expenditure. So you can collate the amount of labour costs and everything that you're claiming, and then you submit that online also through MyIR. Inland Revenue will then review the expenditure side of things, and then again, if they have any questions, they'll come back to you and then they'll approve it, and that will all get processed and either refunded out or applied to your tax liability, depending on what you prefer. I kind of touched on the due dates just on the next slide, but there's a few different due dates to keep in mind, which can be a little bit confusing. But basically, during the year, you can apply for your activity stuff, and at the end of the year, you're looking at applying for your expenditure. And so that's all there. So like on a 31-month balance date, your deadline for general approval is 7th May 2022. And then your supplementary return, which is the expenditure side of things, is due basically a year later, 30 days after the due date for your filing of your income tax return. I think I'll leave it there, but we'll open it up to any questions that people may have about anything that we've covered in the presentation today.
Great. Has anybody got any questions for this very knowledgeable team? Very interesting to really look at that and to see how it all works, and to also, I think, the relief to know that it's possibly not as complicated as it once was, and that you actually would have a high chance if you were planning something to move forward. So yeah, that's really good. We'd love some questions, even if there's one out there. From Malcolm, will we be able to access a copy of the recording? Yes, he had trouble taking it all in. So yes, there is a lot. Yes, Malcolm, we will definitely be able to give you access to that for sure.
Yeah, I appreciate that it is ultimately a tax-based regime, and so it's actually embedded into the Tax Act, and therefore the underlying rules are designed on a tax-based basis. And I think that's one of the key things perhaps I didn't talk about, is that different to the Callaghan, where you had to apply and then see whether you were one of the lucky winners to receive government funding. This is actually an entitlement regime. So everyone who meets these requirements will get the money. And so it's just a process of going through that process and then presenting. It comes back to that point I said, making sure that you present the things that the revenue and Callaghan are looking for so that they can tick the box. It's quite easy to sort of look at that and go, well, look, that all sounds quite challenging. But when you then break it down, and that's why we just sort of help people, guide them through that process, so you can go, look, it's actually quite simple once you know what you're trying to do, and then you're just drilling down to specifically coming down to those technical challenges, articulating that well and concisely. And then most importantly, the thing that's actually quite interesting is you can get lost in the activity sometimes and forget this is all about the money, as I said at the start. So making sure that your costing model is correct and that you're pulling together all of the costs, like Brendan was talking to, is actually at least as important as making sure that the wording's right as well, and so getting the right payout.
Absolutely. So we've just had one more question come in here, Aaron. So if you are accepted for R&D, can you apply for another type of R&D, or is there some kind of limit?
The short answer is practically no. There is a upper limit in which they won't pay, but you would have to be one of the largest R&D spenders in the country for that to come into play. And so you're able to make a claim on, and in fact, under this regime, you need to make a claim on each of the programs of R&D work that you're doing. And so you're registering those activities separately. So you certainly are not limited to only one claim. And in fact, I think in Brendan's slide, he was showing the timing. If you wish, you can actually register for general approval some of the activities as you start them, and then later in the year, you might realise that actually there was more that happened and making a further claim. But your time limit for making those claims is the second month after year end, 7th day of the second month. So realistically, you've got 1 month after year end to finalise your R&D claim.
I think that answers our second question there. So you must initiate the claim process with pre-approval within 2 months of the end of financial year.
I'd actually answer that by saying, well, you want to initiate it during the year, and that 7th day of the second month after is your absolute drop dead deadline to get it in. So yeah, it's getting it done. You can do it from the start, or certainly at least the second half of your financial year is the kind of sweet spot to get it done, so you've not got a mad rush at the end.
Yeah, I think that's a really good point, Simon, because a lot of business, I mean, this brings together both the technical team and the finance team. It tends to be often owned by the finance team because there's it goes into the tax return. But in reality, the key element of this is the technical team or the dev team. But you do need to be mindful of the fact that businesses are going through their year-end rollover, their financial reporting, potentially their audits and that sort of thing. So you've only got that 1 month, because whilst there's 2 months, it's actually only 7 days of that second month that are available. So in reality, it's really just that 1 month. And so what you've got to balance that against, though, is that you want to make sure that your costs of preparation don't get out of control. And so that's about making sure you streamline your processes. So some of the comments that Simon was just making, if you've got a really streamlined process that it's identifying projects and documenting them adequately, then you can drop in an approval application for each project as it sort of kicks off or initiates. If you're not that advanced in your systems, then probably what you're looking to do to try and keep your costs down is to do that at the back end of the year once you've got a good view of what I sort of think at the end of Q3, quarter three, month 10, month 11, you sort of really know what's mostly happened for the year. You can see what's happening for the closeout of the year. That's a good point to then go, we should be scheduling it to try and do that. So we then allow ourselves month 10, 11, 12 and you know, the first month of the next year. And that allows enough of a run time so that if you start to run into people being away or individuals being hard to access, you've given yourself enough runway to actually complete the process.
If I could just jump in there as well, if there's any people here from a financial perspective thinking I'm right near a December year end, I've not got time to do this, the vast majority of the work with the general approval, which is the first step, is actually more the technical side. All that's needed for a general approval is like a ballpark estimate of the costs, and you just want to know what the benefit might be, that it's worth doing. At least 80% of the information gathering is with the technical side for a general approval, if not more than 80, and it's really just from project management checking it's done, and then you can get on with your year-end finances and pick up the actual figures at a later point
as part of the tax return prep.
Yeah.
Great.
Again, I would say that in terms of keeping your cost down of this, it is optimal to try and do everything in one sweep. And put it down and then pick up again. So these sorts of there's always efficiencies, and look, the first year is about standing up a process as well. So if there's people on the call who haven't previously made a claim, the first year can, as with any system implementation or process implementation, there's always a few things, and then once you've got it, you then start to look, where are the efficiencies and how do we make this happen quicker and easier, and how do we collect this data along the way rather than doing a sweep at the end and all those sorts of things.
Yeah, makes sense. Definitely makes sense for that. Yeah.
There's a good question.
We have another good question here as well, possibly the last one because we're slightly over time, but it appears as though the language used in the application is really what this is about. Are there any examples or templates, even if for simple tech projects, to use as a start?
Yeah, that's a fantastic question. In fact, one of the things that we've been feeding back to Inland Revenue and Callaghan for a long time, and they've actually engaged with that, and are in the process of actually putting together some sort of examples, which we're currently consulting. They're not currently released as a short version. It's quite difficult to do that because every claim that's ever been put has somebody's confidential information in it. So it's not as if we can say, well, here's one we've prepared earlier, because of course we can't release it. Callaghan has helpfully actually started to go, well, here's 7 different ways in which we would normally see software coming through. And that actually was one of the things that we addressed earlier in the slide pack. And they've started to go, and here's a made up project that we would have accepted. And they've even gone so far as to say, in the ones that they're currently sharing with us, I don't know exactly what they're finally going to release. They've said, if you write it this way, then we would have problems with it and we'd start diving in and asking you lots of questions. However, the same project, if you wrote it this way, then that's going to help us tick our boxes, and we'd let that one go through. So the point made by Olivia there around that, the language is what it's about. That's correct. Insofar as you do need to address the eligibility requirement, but it doesn't. I suppose I would just say it's not just down to the language. It's about making sure you focus on the right things, and that was a point Simon was making. It's not about saying, "Hey, this is a great new piece of software that no one else is doing in the market. It's got these great new features." That won't get you anywhere. Instead, it's got to be focused on, here are the challenges we had in getting those features through. This is the investigation we had to take, and this is how we tested and trialed that to get that there, because that was the challenge in doing it. And it takes exactly that same project and looks at it through a different filter or a different angle and bringing out those concepts. Those things are generally always there. It's just a matter of making sure that you're referring to the right things.
And that's because at the heart of the regime, they want to incentivize the activity of creating that new knowledge. So it's not the features or the product, but it's actually that intellectual gap that people will then try and bridge, and at the heart of it, that's what they want to incentivize and subsidize.
Great. So just one last question from me. Do you think there's still some evolution to take place with this process, and do you think it will be refined more and become even more, you know, palatable and easier to get through?
Look, I suppose I've been practicing in this field for about 15 years in New Zealand, and then in Australia I was previously an R&D partner with Deloitte over there, and did about another, don't really want to add them up, it starts to get too much, but you know, still 10 or 15 years over there as well. And the reality is that with a lot of government programs, there tends to be a pendulum in and out of different things. Our regime over here started very hard and tight, and the pendulum swung down significantly towards the easy way, and I look forward for it staying there for a while. But I certainly would not expect this to be now chiseled in stone tablets. We will see continual adjustments. And I think that the revenue is constantly trying to balance the policy objectives of trying to encourage and incentivize R&D without opening the floodgates and letting all the sheep run through, so to speak. So they constantly sort of, and that's been my experience over the years, is that screws get tightened and loosened as various things. But at the moment, we're in a thing where certainly all of the feedback we're getting is that they're really looking to try and approve claims, which is really positive. They're looking to try and get people on board with this process and engage with this regime, and I think that's a really positive thing and encouraging for anyone who's looking at it, who might have previously been a bit reluctant, because there was a fair bit of noise out there around how hard this process was.
Yeah, I think that would be an interesting thing for our members, because obviously not everybody could attend today, but to even potentially get that message out there through, through some sort of messaging, Aaron, to let people know that it's not as hard as it once was, and that take the plunge and yeah, let's do it. So yeah. So on that note, I can see Malcolm typing, so I'm not sure if he's typing a question or not. He just says he wants to thank everyone involved for putting together this webinar. And he's new to this and has a lot to learn. So thanks for that, Malcolm. We really appreciate that comment. And I just want to say thanks to you guys. Like, really, it's been very fascinating and a really big learning curve for me as well, and keen to continue the discussions around this, and keen to get maybe some more material out to our members, and then move forward from there. So thank you very much. And Kate, thanks for organising everybody to come along and share your team with us. And yeah, we hope that the members will get quite a lot of value out of this. Yeah.
Welcome. Thanks, everyone. Thanks for organising, Ro.
Thanks.
Yeah,
Take care. Have a great Friday
Thanks,
and a great weekend.
Thank you.
See you.
Bye.
Bye. Bye-bye.